In the world of corporate compensation, some plans raise eyebrows, others shatter expectations entirely. Elon Musk's newly approved pay package at Tesla falls squarely in the latter category. A plan so ambitious, it could make him the world's first trillion-dollar man. But this isn't a simple blank check to unlock this unprecedented fortune. Musk and Tesla must embark on a journey that redefines the very scale of industrial and technological achievement. It's a high-stakes gamble that ties the CEO's personal wealth directly to a future that, for any other company, would sound like science fiction. Tesla shareholders have given their CEO, Elon Musk, the green light on a pay package that could ultimately be worth nearly $1 trillion. With the votes tallied and the approval secured, Musk publicly thanked his investors. But now, the real challenge begins. Unlocking this treasure chest requires navigating a gauntlet of staggering operational and financial milestones. Before this latest plan, Musk's stake in the electric vehicle giant stood at around 13%, a figure reduced by various share sales over the past few years. This new package is designed not just to reward him, but to dramatically increase his control and bind his future inextricably to that of the company he leads. The structure of this monumental compensation plan, which was first detailed in early September, is built around a series of 12 massive tranches of stock options. Each tranche is a key to a portion of the total prize, but each lock has two tumblers, an operational milestone and a market capitalization threshold. If all 12 tranches are successfully unlocked, Musk would be granted a total of approximately 424 million shares. This influx of equity would effectively elevate his ownership stake to around 25%, giving him significantly more say in the company's long-term direction and insulating him from the pressures of activists, investors, or potential takeovers. The board has argued that the targets are deliberately aggressive, designed to push the boundaries of what is considered possible and ensure that this colossal payout is earned only through equally colossal success. The operational milestones read less like a corporate roadmap and more like a manifesto for the future of transportation and robotics. To earn his keep, Musk must oversee the delivery of Tesla's 20 millionth vehicle, a feat that would place the company in an elite club of automotive manufacturers. He must also make the vision of autonomous driving a widespread reality, with a fleet of 1 million robotaxis actively in service on public roads. Beyond cars, the plan ventures into the realm of artificial intelligence and humanoid robotics, requiring the company to sell 1 million units of its Optimus robot. These aren't just product goals, they're benchmarks for creating and dominating entirely new markets. Financially, the hurdles are just as daunting. One of the key operational milestones requires Tesla's annual earnings before interest. Taxes, depreciation, and amortization, or EBIT2, eventually reach an incredible $400 billion. To put that figure into perspective, Tesla's total EBITDA for the last fiscal year was $16.6 billion, meaning the company needs to grow its core profitability by a factor of nearly 25. Parallel to these operational achievements, each of the 12 tranches is tethered to a specific market capitalization target that the company must hit and sustain. The first rung on this ladder is a market cap of $2 trillion. While a monumental figure for any company, it's not an entirely distant dream for Tesla, whose valuation currently hovers around the $1.5 trillion mark. From there, the climb gets exponentially steeper. Each subsequent tranche requires the company's valuation to grow by hundreds of billions, and in later stages, by trillions. To claim the final tranche and receive the full award, Musk must steer Tesla to an astronomical market capitalization of $8.5 trillion. This would make Tesla by far the most valuable company in human history, dwarfing the current tech giants and placing its valuation on par with the GDP of entire nations. The plan ensures that shareholder value is the ultimate metric, with Musk's reward directly proportional to the wealth he generates for those who have invested in his vision. Furthermore, this is not a golden parachute. Tesla has structured the deal to ensure Musk remains committed for the long haul. The shares he earns from each tranche come with a significant string attached, a lock-in period. While he gains the voting rights associated with the shares as soon as they are awarded, granting him that desired increase in control, he is prohibited from selling them until they fully vest. This vesting period is set at a minimum of 7.5 years from the date of the award, effectively ensuring that even after hitting a milestone, he can't simply cash out his winnings and walk away. This provision is designed to align his interests with long-term sustainable growth rather than short-term stock price spikes, forcing him to stay at the helm and navigate the company through the consequences and challenges of the very growth he is being paid to create. During Tesla's third-quarter earnings call, Musk addressed a question that has been a sticking point for many compensation experts. Why not pursue a simpler path to securing his control? Critics argued that the board could have issued a special class of high-voting stock, a common practice at founder-led tech companies like Alphabet and Meta. This would have given Musk the voting power he desired without the eye-watering financial payout attached. Musk's defense was that this option was simply not on the table. He explained that unlike Google and Facebook, which established dual-class share structures upon their incorporation, Tesla was not founded with that mechanism in place. According to Musk, retroactively creating a special class of stock for a company already publicly traded on Tesla, a scale would be a legal and logistical impossibility, leaving the performance-based stock option plan as the only viable route to achieve his goal of increased control. While the targets appear almost impossibly aspirational, some analysts have pointed to a potential safety net woven into the fabric of the agreement. The independent proxy advisory firm Glass Lewis, which strongly recommended that shareholders vote against the package, highlighted a clause that grants the Tesla board broad discretion. This provision, they argued, could allow the board to approve the dispersal of some stock tranches, even if the specific hardline metrics are not perfectly met. This suggests that if Musk makes significant progress toward a goal without hitting the exact number, the board could still decide to reward him, introducing a subjective element into what is otherwise a rigidly defined performance-based plan. This discretion has been a point of contention, with critics suggesting it undermines the all-or-nothing spirit of the aggressive targets. Nevertheless, the plan has its staunch supporters on Wall Street, who see these audacious goals not as fantasy, but as the next logical step in Tesla's disruptive journey. Wedbush analyst Dan Ives, a longtime Tesla bull, remains confident that the company is already on a trajectory to begin knocking down the first set of these colossal targets. In a note to investors following the shareholder vote, Ives reiterated his optimistic outlook. "We continue to believe Tesla could reach $2 trillion market cap early 2026 in a bull case scenario and $3 trillion by the end of 2026 as full-scale volume production begins of the autonomous and robotics roadmap," he wrote. For believers like Ives, this pay package isn't just a reward for past performance. It's the fuel for a future where Tesla transcends its identity as a car company to become a leader in artificial intelligence, robotics, and sustainable energy with a valuation to match that ambition. The debate will undoubtedly continue, but for now, the path is set. The milestones are in place, and the world will be watching to see if Elon Musk can once again achieve the impossible and in the process earn a fortune that truly is out of this world.